Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Wednesday afternoon, we have McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq-100 weekly performance. And Ryan, as we speak on June 23rd, hit an all-time high today.
Yeah, it was another good week for QQQM and QQQ, up 1.72% versus S&P 500 up 1 basis point, and S&P 500 value down 1.83%. After the Fed meeting last week, you saw the 10-year drop under 1.5%. You see the yield curve continue to flatten, so it kind of exacerbates this growth outperformance over the week. Kind of some mixed economic data, but I think something worth mentioning is the fact that we're seeing housing take a little bit of a pause. So we've seen existing home sales down in May nearly 1%. It's actually 0.9%, but that's the fourth consecutive month of decline. Median sales price, however, is just over $350,000, which is a record. New home sales in May down 5.9% to a 769,000 annualized pace. There, we've also seen prices continue to increase, in part, of course, from rising costs of materials, some of the supply issues that we've talked about ad nauseum. But median sales price there has climbed to 374,000, also a record. And then today, you saw mortgage applications growing by 2.1% versus prior 4.2%. But I think if you look at the chart here, where we're plotting existing home sales along with new home sales for the past 3 years, you can see that huge decline in both readings last year in March, April, and to a certain extent May. But then you get the significant bounce back. You see this demand fueled by the COVID restrictions. People needed more space, particularly those in the city where you were very limited in what you could do. And that's held kind of pat until 2021. We've started to see those numbers decline. We've seen home prices rising, right? That not a ton of affordability out there. And it's coupled with the fact that we've seen vaccinations rise and restrictions starting to lift. So, something just worth keeping an eye on, the pause in housing. But what's a week that we talk without talking about the Fed? So after last week's announcement, we've had a couple of comments. Yesterday, you had Chairman Powell in front of the House Select Subcommittee on Coronavirus, reiterating substantial part or maybe even all of the inflation overshoot has been driven by kind of pandemic affected categories, used autos, travel and leisure. Continues to reiterate the fact that the Fed is going to be patient. Yesterday, you had New York Fed President John Williams in an interview talking about the progress that's been made since December, but not close to the substantial further progress language that the Fed has set out. Cleveland Fed President Loretta Mester was at a virtual event talking about she'd like to see a little bit more strength in the employment market, kind of noted September as an important part as schools are open and some of those unemployment benefits roll off. And then today we had comments from Atlanta Fed President Raphael Bostic, a little bit hawkish. The markets largely shrugged it off, not much of a reaction. We saw Nasdaq-100 up 17 basis points, S&P up 7 basis points as of about 10 minutes ago. So, kind of this summer slowdown, sort of a back and forth driven on light volumes. But, I think it'll be important to see any further comments from the Fed and certainly keeping an eye on what's going on in housing.
And Brian, just to wrap up here, let's just take a deeper dive into where we're seeing the outperformance within the Nasdaq-100.
Yeah, so the growth-oriented sectors and overweights, tech and discretionary leading the way higher. On the other end, the lack of financials exposure, the sector was down over 3% in the S&P 500, all contributed to QQQ outperformance. Within tech, Apple, NVIDIA, large contributors, but also we got some contributions from some of those differentiated holdings that we talk about: DocuSign, Zoom, Splunk, Atlassian, Okta, Workday. Similar story in discretionary, right? Kind of the main contributors, Amazon and Tesla, but some of those differentiated holdings like Mercado Libre, Lululemon, Peloton, and JD.com also contributed.
All right, Ryan, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.